learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at June 24, 2022. And today we gotta talk about why a recession is not bad. At least that is what we got today. Literally, recession fears, even as it's reflected in the bond market, they increase. But if you notice, the NASDAQ was up even though we couldn't get past the 379 there on the SPY and have pretty much stayed flat over the last couple of days. So we got a lot to talk about. I need to tell you why I'm wearing this shirt. We got to talk about the bank stress test that came in after hours, and it was mostly good news, so we're going to see with that. And then we are going to talk about the recession, what happened today, and now broader signals that you can follow. And I have a specific date, Fed meeting, and just a general date for you to be watching, and we are already watching movements with it in terms of the bonds. So we got a lot to talk about. Drop your thumbs up on the video. Make sure you're subscribed. And yes, we've been live on this channel, baby. So hopefully we see you there in the morning, okay? Tomorrow morning, 6, 8. Okay, yeah, I'm going to see you there. But let's talk about it. What happened today? Oh, yeah, why am I wearing this shirt, first of all? So I'm running out of shirts. Literally, y'all are just about to watch me go back to all of the Colt gear I have no more shirts to show you. But then Lending Tips was like, I'll get you some shirts. And then I think he thinks it's a game because then he got me a DMX shirt. He's like, yeah, you can rock this. So I'm down with it. I guess maybe y'all send me some shirts. We're going to see how it is. But don't worry, we got enough breathable merchandise to wear. But anyways, now let's talk about what happened today in the recession, and then I will go over the bank stress test, and then we will get into the plays. But here is your first key. This is what you need to understand. Is a recession bad? Yes, it is. It's bad in general in the sense that a recession would mean lower growth, higher unemployment, less business spending, usually stocks. I mean, it's hard to say, and that's what you got to understand here. Recession is a broad term, but over the course of history, some recessions have been deeper and longer than others and had, more widespread pain versus affecting certain industries. So recession is bad, but how we respond to a recession, that is actually bullish, aka rate cuts and the Fed now getting behind the market and supporting it with quantitative easing, bond buying, mortgage. I know some of you are getting pissed hearing this. Trust me, I understand, but I'm trying to let you guys in on how the broader market is viewing things, because this is where you're getting some of the weird market logic where it's like, yeah, recession and low growth would be bad, but what are people able to respond to today? They're like, well, recession means more rate cuts and then the Fed is going to stop. So that's what we got today, and that's even now what we saw with bonds, and now that's the next thing. We've been saying this for months. I've literally been telling you this. Again, if those yields come down, aka TLT goes up, that is signaling more recession fears. Why? Because if you think there's going to be a recession, then you're going to be assuming the next step would be recession leads to lower rates. The rates will not stay this high, and now the rates are going to come back down again. If you look at the economic data and you're like, okay, economic data is pointing towards a recession, just like we saw today with the PMIs. Again, it was bad data. How the hell did we end up? It's simply because people are saying, okay, that data is confirming recession, and if the recession is closer than we think, that means the rates are going to be coming down more than we think, and then in a 1, 2, 3 year time scale, some of those longer dated bonds make a little bit more sense. Hence, you're watching the yields come down. People are starting to buy the bonds. Again, another thing we saw today in the midst of it, and this is a big one for this whole week, if oil and commodities are coming down, and especially in ways or in assets like copper that signal, a slow in growth, then people are going to go and be buying bonds again because they're worried about economic activity. They know the Fed will change stuff, but now if you've been in energy or anywhere else, bonds may start to be an attractive area to put your money, especially if the the recession will materialize sooner rather than later. If it materializes later, then they're going to sell bonds and then they'd be worried about inflation. But trying to give you the breakdown today because this was probably the most confusing thing. You saw bonds going up. The dollar was kind of weird and even global currencies. But a lot of people were asking, how does Powell get a little bit more hawkish? Again, today at the meeting, he brought up the term unconditional. Again, it didn't sound good. And the data has been awful. But now you're watching the bonds kind of relax and the market going up. This is now people getting ready for the next steps of recession. So now if you don't want to believe this or it's a little bit too much, maybe confusing, here is the final point and the main thing you got to understand. We've been getting a lot of back and forth between either worried about inflation or worried about recession. You are going to watch that over the next coming weeks. Even right now, nothing is set in stone. So don't be confused when the market goes up or down and be like, oh, wait, no, why is this happening? It's because we don't have an answer to this. It's as simple as that. And what's going to happen, CPI data is going to come out, PCE, as that stuff comes out and the rest of the data moves things, that is going to now start affecting the Fed futures and the bonds. And yeah, we know Powell will do whatever now. He's going to respond to the data, but the credibility of the Fed futures, that has remained intact. And that right there, as the data moves, that's going to move and people are going to make their decision. Okay, does the data point to inflation? Does it point to more recession? And based on that now, you're going to watch this broader move in the market of, okay, are we going to sell off more or are people going to buy the dip and start buying bonds and feeling safe? But I'm giving you way too much detail on this. What I'm trying to tell you now is watch the Fed futures and watch as we play this game all the way leading into November, because that is what we got here today and this week. If there was any big breakthrough from after the Fed, it is what we saw today and over the last couple of days now. As the recession odds have been rising, the rate cut odds or the amount of rate hike odds, they have been declining, and it's starting at November. So here's the Fed futures, and you can notice in the last day or so the odds of doing a triple hike at the next meetings, whether it's July and then coming into September, both of the previous day probabilities have increased, meaning more odds of higher rate hikes in the short term. But now look at November and go to any Fed future past November, which is the midterms, and we were talking about this yesterday, but now go look at all of them. They have all dropped now. So what happened in the last 2 days? What is the evidence to everything we're saying with, okay, recession's good, or why is the market reacting like that? It is literally the Fed futures. In the whole process of everything we've been seeing now, even today as the market was going up, rate hike odds in the short term were going up, but now as people talk more and more in recession, as commodities, oil, and everything else starts to come down, again, bad PMI data, bonds start to come back up here, the investor sentiment starts to get worse and all of that other things, what do we start noticing? Rate hike odds in from November on, they're dropping now. So if that drops again, that's pretty much people saying maybe by the end of the year we'll see the Fed slow down, or maybe they totally pivot and then we may start to see a market on the horizon where the Fed actually supports it. So that's the big rundown for today. Hopefully this helps. Again, I'm telling you, you're going to hear about this in the next coming weeks. It is going to be very important. I'm sure we'll even come back to this video. So the DMX video, baby, but very important. I know a lot of opinions and a lot of confusion with it, and sometimes it can be annoying, but this is what we're dealing with now, and you're seeing things change quickly, and little by little, you know, these are the little clues that we're sniffing out to get a better idea. So vibe with it. Things can also change, and we're going to really see what happens from there. But now let's talk about this stress test. So we were waiting for that, thought it was going to be a big catalyst. Some of you said it'll probably be a non-event, and it kind of was. Pretty much it was good for all of them. Every single bank did good. There was no real warning signs. And here's this scenario. If you don't understand, they tested the banks under very unique circumstances and wanted to see if their reserve ratio, how much money they have in reserves, if it would fall below a certain level. So here at the test, or this time around, the scenario featured peak unemployment at 10%, a real GDP decline of 3.5%, and then a 55% drop in equity prices. And then on top of that, this was interesting, it was factoring factoring in inflation coming down to 1.25 in the third quarter, while unemployment rose as well as lower demand. So pretty much the banks passed with flying colors. Even after all of that, it was like $615 billion in losses. The banks all still met their capital ratios, and now this could be good news. We're going to see the follow-up tomorrow. I was kind of disappointed because I thought it could move some things, but really we'll see with the tomorrow. But now this is going to open up the door for the banks to start increase buybacks and dividends, and really a lot of people were bullish about that, but no negative surprises. Citi did do a little bit worse, but I think the real reaction we'll see, but for the most part, kind of leaning towards non-event now. So there was that. I don't think I got anything else, so let us get into the plays. So got 3 different plays that I'm looking at today. The first one, this was coming into tomorrow and next week, but XLV, and we brought the XLUs. Remember, we got that a couple days ago. Those went up 200% today. I sold one for 60 cents, made it free. That's how much I paid for all 3 of them. But XLV, remember, I brought this up. I was already looking at it, and pretty much the way I'm looking at it here for tomorrow, it's been an awesome week for utilities and healthcare. If they do come down a little bit and the premiums kind of take a chill pill, I might be willing to go for it and then take that as a next week gamble to ride maybe continued performance for all the defensives, but they have really been showing out and doing very good. So XLV, keep your eye on it. Again, this last week, it is dominated alongside of utilities, so depending on how the narrative and recession and everything else plays out, this one will definitely be one to watch. So that is going to be the first play. The second play, FNKO, baby, FNKO. They got a very positive analyst note today. They called them both cheap and defensive, but the fact they were called a defensive, I don't know. I don't want to call it a meme stock. Again, we've had some chads give really good reasoning behind it, and it seems pretty compelling, but the whole idea is the way it was being viewed today, both on the retail side and now the banking, I think people liked it. So if we do get activity in a continuation tomorrow, especially depending on how fast or slow the market is, I would really, really be looking at that one, and I think it could be good. But that is the second play, and then finally, coming into the third, baby, FedEx. So I still got my play. It's actually, I think I'm only down like maybe $1 or $2, again, with how it moved, but let's see how the analysts take it tomorrow. They had a lot of guidance to digest. Again, even on the conference call, they're bringing up a lot of stuff, but pretty much their guidance increased by a little bit, and their earnings for this quarter missed by a little bit. So again, something we could have seen as an event, it's kind of right there in the middle, and that's why I'm like, all right, we're going to have to push this over to the next card. Let's see how tomorrow plays with it, but I think continuation will be key. You also saw a reaction there with UPS, so we'll see how it plays out, but it's pretty much right at our price that we even shorted it at, so we're going to see where it goes, but I think it's going to be a definite interesting one on Friday, or at the very least coming into next week. But those are the main plays. As far as everything else, I only made one other play. I grabbed a Neutrala July 70 call, and I bought this for 25 cents. I put a fill early in the morning, and I've been doing this a lot lately. I mean, this isn't about the play, but just in general, I've been finding like plays that I like at a certain price, and really, I'm just putting the orders in at a low price, and I'm just leaving it there, and low-key, eventually, you do get filled with a lot of this weird volatility, so that's how I was able to get it at a pretty decent price. They have an update. They're going to be presenting at a liver conference or something tomorrow, so we'll see how it plays out. Again, they have something there with Regen as well, too, but tomorrow is an expected data release or speech, and if that ends up good, I think that one could be a good one. Other than that, like I said, sold out the XLU, still got the Meta from last week. That one's going negative. Again, even the Tesla puts from last week, those are clapped again with bonds. The shy ones, those ended up coming down, but I am really going to be watching bonds from here. I think we have enough time, and really, like I said, this back and forth between CPI data and everything else, that is going to let us know whether or not bonds have really topped out, or if we should really expect more volatility from here. But that is pretty much it. Tomorrow should be a lot of fun. It's going to be Friday. And that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, anything worthwhile takes work, baby. You will reap what you sow. So plant, work, and watch the harvest come, Bob. I was getting confused there, bro. I was about to just I don't know. I think I ended it weird this time, but Chad, I'm so excited. I hope you're as excited. I can't believe it's already Friday. We're going to have a good Friday this time around, so let's keep it positive. Hopefully hopefully y'all staying blessed, and really, I hope you guys have really just been picking up with what this market is providing. There's been a lot of smart things, a lot of confusing things, but these are the moments where you learn. And like I said, if you can't get taken out by any of this and you can start to understand it, you're gonna be unstoppable, baby. So I hope you're ready. Have a wonderful night. Have a wonderful evening. I'll see you in the morning. Oh, wait, what happened? Okay, goodbye. I just broke it.